It is Tax Tip Tuesday. This morning we are joined by Chris Porter with Porter Kinney. Good morning. How are you?
Good morning. Doing well.
Good.
Thank you.
Getting busier, I'm assuming.
We are, yes.
Yes. So today we're going to be talking about increasing your sales tax deduction. So how do you go about doing that, Chris?
Well, first of all, it's important to realize that you can take as an itemized deduction on your tax return either the state income tax that you pay or the state sales tax that you pay.
Okay.
And since we don't pay income tax in the state of Washington,
right,
most of us, unless we're working in another state, are taking the state sales tax deduction.
Okay.
So the way you go about that is one of two ways. Either one, you could add up all of the sales tax you paid during the year by saving every receipt for every purchase.
What a hassle.
Yeah, not many people do that.
No, they don't.
Or number two, you could take the IRS estimate of how much sales tax you paid based on your income,
okay,
and then you could add to that sales tax paid on a vehicle, such as a car, pickup truck, private jet, if you're planning on buying one of those.
I wish. Yeah.
A boat.
Yeah.
Or the sales tax paid on a substantial renovation to your home or addition to your home.
Okay.
So taxpayers that bought a car last year should find that receipt. And people that added onto their home, added granite countertops, new wood floors, those kind of things, that could save a lot of money on your tax return.
So those are the receipts we need to be saving, those big
those
purchases.
larger purchase receipts.
Okay, so how do you maximize that deduction?
Well, just by keeping those things in mind. Also, there are times when you can deduct the sales tax paid on an entire home purchase.
Oh, wow.
There are limited circumstances, but I've seen that a few times when literally a taxpayer will take like a $30,000 sales tax deduction because they built a custom home, and that's the sales tax they paid on the custom home.
So how does that apply if it's so rare? Is it just in those circumstances where you're building?
Yeah, you could talk to your CPA about different circumstances when that would apply, but one of them would be if you bought land yourself and then paid someone to put a custom home on that land, that would be one of those circumstances.
Good information to know. We appreciate your knowledge.